Hi guys, this is Richard from the Stable Center, and today I'll be covering Chainlink. Full disclosure, I do own Chainlink, but nothing I say in this video is financial advice. Anyway, today we'll start things off with more Chainlink news and stablecoin adoption. So there's a new project called xStocks that's working on bringing real-world stocks onto the blockchain, and Chainlink is playing a key part of it. This could be a major step forward for tokenized assets and on-chain finance. Now, xStocks aims to let people trade tokenized versions of major stocks like Apple, Tesla, and Microsoft, but directly on chain. The idea is to create a global market that runs 24/7 without relying on traditional brokers or stock exchanges. Chainlink provides the infrastructure that helps make this work. They are using proof of reserve, which is basically a way to verify that each tokenized stock is actually backed one-to-one by the real asset, which is something we discussed in the previous video. And they are also using CCIP, or cross-chain interoperability protocol, to allow these assets to move securely between blockchains like Ethereum, Polygon, and Arbitrum. This could open the door to using tokenized stocks as collateral in decentralized finance, or even trading them with lower fees and fewer restrictions than traditional finance. It also shows how Chainlink is quietly building the infrastructure for the next generation of financial products. If tokenized stocks do go mainstream, platforms like xStocks and infrastructure like Chainlink could play a very big role. So let's start the Chainlink analysis off with some risk and regression analysis. So if you take a look at the right-hand side of your screen, you can see various risk levels. The colder colors, like blue and green, represent times of low risk, which are the best times to purchase Chainlink. And the warmer colors, like orange and red, represent times of high risk, which are the worst times to purchase Chainlink. Today, Chainlink is printing a risk level of 0, which tells us that buying Chainlink today is low risk, not financial advice. On top of that, we can take a look at the regression lines. The best times to sell Chainlink is when Chainlink is trading above the red regression line, indicating that Chainlink is overvalued. And the best times to buy Chainlink is when Chainlink is trading near or under the green bottom regression line, indicating that Chainlink is undervalued. Now, if we combine both risk and regression analysis, we can see that right now, Chainlink is printing a pink risk level under the green bottom regression line, indicating that Chainlink is undervalued and that buying Chainlink right now is considered low risk. Furthermore, there have only been 2 other times in Chainlink's history besides today where the price of Chainlink traded below the green bottom regression line and printed a pink risk level. The first time was back in December of 2018 when the price of Chainlink was trading at 20 cents. And the second time being in June of 2022 when the price of Chainlink was trading at $5.89. Just a quick disclaimer, mathematical models are based off of historical price action, and we all know that history cannot solely be used to predict future price action. In other news, Mastercard and Chainlink just teamed up to bring crypto one step closer to the mainstream. Through a new integration, Mastercard users can now buy crypto directly on chain using their credit or debit cards without needing a centralized exchange. This is possible through a partnership with Swaps.app, which uses Chainlink's decentralized Oracle tech and Mastercard's payment infrastructure to connect fiat payments to blockchain transactions. Behind the scenes, Zero Hash handles the cryptocurrency liquidity and compliance, whilst Chainlink ensures the data connecting the card network to the blockchain is secure and verifiable. It's a smooth, simplified experience that could onboard millions of new users by removing the typical barriers to entry, like creating cryptocurrency wallets or navigating cryptocurrency exchanges. For Chainlink, this is another step towards becoming the backbone of real world crypto adoption. And for Mastercard, it's a clear signal that traditional finance is starting to embrace Web3. And the final piece of news is that Amazon and Walmart are reportedly considering issuing their own USD backed stablecoins, aiming to streamline payments within their ecosystems and potentially across borders by bypassing costly credit card interchange fees from Visa and MasterCard, which amounts to billions of dollars annually. This is further evidence of the stablecoin supercycle I've been talking about. So, unlike gift cards, these stablecoins would operate on blockchain networks and be pegged to the dollar, meaning users could potentially spend them not only in store, but also elsewhere with real time settlement benefits. Importantly, this move aligns with momentum in Washington, specifically the Genius Stablecoin Act, a bill that has passed allowing the regulation of private stablecoin issuance, which could offer Amazon and Walmart a legal framework to issue their own tokens. For customers, stablecoin payments could mean faster transactions, enhanced loyalty rewards, and greater financial inclusion. For the retailers, it's a strategic opportunity to save billions of dollars in fees, earn interest on reserve assets, and deepen customer engagement. If they move forward, this could mark a significant shift in consumer payments, turning these retail giants into payment layer powerhouses and forcing traditional banks and card networks to rethink their dominance. Okay, so let's actually move over back to TradingView and take a look at the Wyckoff analysis. So, moving into the Wyckoff analysis, not much has changed really. Chainlink is trading in Wyckoff accumulation and in the process of forming its third LPS, which stands for last point of supply. Chainlink is still holding the blue Fibonacci retracement support area I outlined in the previous video, and I am still anticipating Chainlink to hit at least $60, which is the white 1.618 Fibonacci retracement. I talked about the importance of that Fibonacci ratio in the last video. As for an update on price action, ideally, I don't want to see Chainlink break below last month's low because the whole entire purpose of an LPS, which stands for last point of supply, is to have a bullish higher lows market structure. In other words, in an LPS, market makers accumulate whatever Chainlink supply is left on the market before the eventual breakout to the upside. These last point of supplies, LPSs, tend to form higher lows, which is why I'll start to worry if Chainlink starts breaking below last month's low. Now, moving over to the Elliott wave count. Honestly, not much has changed from an Elliott wave perspective. I am still expecting an impulsive move out of this multi-year sideways trading range to new all-time highs. We still need waves 3, 4, and 5 in green to complete our overshooting blue B wave. The targets for an overshooting B wave typically span between the 1.236 to 1.382 Fibonacci retracement, which spans between $92 per coin and $131 per coin. After this overshooting B wave tops out, we can start looking to start wave C in blue. Expect the next bear market to take Chainlink back into the single digits where we can accumulate Chainlink for the next bull market. And you may be wondering how Chainlink can be so integral to the cryptocurrency ecosystem, yet Chainlink continues to remain trading at these depressed levels. And the truth of the matter is that fundamentals don't matter. Utility doesn't matter. Take gold and silver, for instance, which are assets that have existed since the dawn of time. Some people even call gold and silver God's money. What is gold actually used for? Gold is used for vanity purposes. Gold is worn by people who want to show off and impress others. And no, gold sucks as a store of value and it sucks as a form of currency. I mean, for God's sake, up until recently, the price of gold traded sideways for 20 years as global governments obliterated the value of your currency. Silver, on the other hand, has a lot more utility than gold through industrial applications, yet the price of silver remains far below the price of gold. Gold's market cap is $22 trillion, dollars, as opposed to silver's market cap being worth only $2 trillion. Dollars. This is very similar to comparing Chainlink versus Bitcoin. Chainlink has a lot more utility than Bitcoin, yet remains significantly cheaper than the price of Bitcoin, and I don't really foresee Chainlink's market cap flipping Bitcoin's market cap anytime soon or ever. Remember, utility does not equal value. That being said, even if Chainlink does not flip Bitcoin, Chainlink may still outperform Bitcoin for the rest of this bull market. I'll discuss those prospects later when we take a look at the Chainlink against Bitcoin valuation. Now, moving into the short term, we have a series of nested 1-2-1-2 structures, which is not really reliable in the short term. I outlined a simple conditional statement. If Chainlink breaks below $12.73, that will trigger a drop to $12.58 and possibly $11.42, which are simply the levels outlined in the blue Fibonacci retracement support area I discussed in the last video. Now let's move on to trend-based time fit extensions. So as you can see, every time Chainlink has crossed a 0.618 trend-based time fib extension, or any derivative of the 0.618 trim-based time fib extension, the price of Chainlink has experienced a lot of volatility. For example, going back to August 17th of 2020, the price of Chainlink crossed the 0.618 trim-based time fib extension, and the price of Chainlink dropped from $19 per coin all the way down to $7 per coin. In 2021, the price of Chainlink crossed the 1.618 trend-based time fib extension, and the price of Chainlink dropped from $51 per coin all the way down to $13 per coin. On top of that, back in January of 2022, the price of Chainlink crossed the 2.618 trend-based time fib extension, and the price of Chainlink dropped from $25 all the way down to $5. Now, the 3.618 trend-based time fib extension did not see Chainlink really move much to the upside or downside, so we'll skip that. The 4.618 trend-based time fib extension saw Chainlink embark a new bull market, trading from $5 per coin all the way to $21 per coin. The 5.618 trend-based time fib extension saw the price of Chainlink drop from $22 per coin all the way down to $8 per coin. And the 6.618 trend-based time fib extension saw the price of Chainlink go from $13 per coin all the way to $30 per coin. The next time that Chainlink crosses the next trend-based time fib extension is August 4th of 2025, so get ready for Chainlink to finally break out of this boring multi-year sideways trading range. So let's close things off by taking a look at the Chainlink against Bitcoin valuation. We can see that the Chainlink against Bitcoin valuation is trading in a compressed, coiled up triangle pattern, meaning that the breakout is coming soon. The fact that the Chainlink against Bitcoin valuation briefly traded under the 2017 bull market top before recovering signals to me that the probability of an upside breakout is higher than a breakdown. All right, that's all I got for this video. Thank you guys for watching, and I'll see you guys in the next one. Take care.